Australia's dollar has hit a 9-month low and is at risk of a slide as China's economic woes increase. Joining us live now, Chief Market Strategist at InvestSmart, Evan Lucas. Evan, it is good to see you this morning. So what do you make of what's happening in China's economy at the moment? How do you explain that to our viewers this morning?
So there's several factors going on, Pete. First and foremost, you need to point out they have what we refer to as deflation. We sort of use that a little bit liberally at the moment, but deflation is where prices are actually going backwards. What we're trying to get is disinflation, which is where we still have inflation, but price is easing up. So that's part and parcel. There's also a general malaise in overall manufacturing in China, which is not what you'd normally expect. Beijing has been very resistant to do what they've done over the past now 40 years, not 30 years, but 40 years, which is stimulate to get themselves out of economic sort of hardship. They've been resistant to that. They've certainly not allowed the money taps to be opened anywhere near the same level. So manufacturing is actually just expanding. And I say that deliberately. It's probably actually contracting. And that is something we haven't seen in China's sector of manufacturing also in 40 years in terms of that space. The final part of it comes down to property. And the property market we knew before COVID was under pressure. And then we have seen it in the COVID era go into a level of hardship we've never seen really in the Chinese boom period. And that means that, the overall risk taking of Chinese investors is also down. So putting those three together, that is where we are now currently sitting, that they haven't had the economic boom of reopening from COVID. They haven't had that renaissance period. They have deflation rather than hyperinflation like the rest of the world has had. And overall, there is just this sort of willingness politically not to do anything. Now, the word is yet. It's clearly coming because the other part of it is that there is a growing discord in the Chinese population around it as well.
And what's that doing to markets? I mean, is there a ripple effect going on here, Evan?
Yeah, well, you just sort of said it before with the Aussie dollar. I mean, the Aussie is always seen as that Chinese proxy play, and there's two parts to it. I'll come back to the China part. The other part is the fact that the RBA is now looking like to be on hold, and that's also a slight negative. But the China story is there. If we continue to see lower manufacturing output, lower economic production out of China, being the fact that we are 37 to almost 40% of our exports go to China, and they are manufacturing materials like iron ore, etc. That is why the Aussie is under pressure at its current level and going further. It's not just that. You look into places like Southeast Asia that are just as reliant, if not more, than we are on it. They're also seeing those signs as well of a Chinese slowdown being an economic sort of drag on those places.
Okay, wage price index out today. Evan, what are you expecting here?
So this is the interesting, the economists are split. Some are actually expecting a bit of a jump because we do now get to factor in that low and medium income increase that we saw from the Fair Work Commission. So that base wage comes through, what it's then done to spread through up that sort of band. So the expectation has actually quite widened. It's between 3.5% year on year to as high as 5.6%, with the median now coming in at 4.4. So that would be the highest wage price growth numbers that we've seen in almost 2 decades, if that is confirmed. And then you get that pressure around whether or not that's going to put upward pressure on inflation. It's not enough. I need to point that out there if it does come in at the median, but it's an interesting quarter to be looking at for wages.
Sure. Evan Lucas, good to see you as always.